NRA not meeting targets. Then always year after year they meet their targets. You say, but I go tell you 98.1 and with people them it has been a very, very difficult 2022. Going into 2023, it has even got worse for the business community.
Now, the NRA man, Ibrahim Suri, the senior commissioner, domestic tax department, talk about how they don't reach their target and who said they get the couple from the taxes them when they collect. Una as business people, how impactful NRA reaching their target or collecting their taxes also they to una as business people also.
Well, again, you go to see, difficult as it is, we still pay with taxes them. Then come with the GST. I mean, we cooperate with them. We say now with the importers, then we've been the revolt against them. But at the end, we talk to we partners them, we people them. We say, look, this is for the country. It is for the good of the country. Me say knocking like when government can always say, oh, we go look for budgetary support. Most of the time, then they look for development partners. Then we need for actually generate we own revenue internally, and they pay with the taxes. Them. So if then they achieve their targets, then it means they pay with taxes.
Reaching their target, and you did raise concerns, say business difficult, but we still reaching our targets them. But at the end of the day, we still do the business, and people will tell you, say, you get forget a pushback effect on the people and we get for goodbye to una as business people una know the loss at all.
Again, I am sure you yourself know the price of rice. The price of rice about 4 years ago was 180,000. Today, a bag of rice is over 500,000. Cement was what? About 75,000. Today, now 150,000. You go see how all done double. But the little bit what would they make, would they still they give back to NRA? Now that make NRA they achieve the target.
All right, continue for the way to the program. They come back to you just now. They can look at now the 2023 Finance Act, where Parliament already done agree for. We they start with the National Revenue Authority, NRA. We Ibrahim Sori Kamarad in the studio from NRA. Let me just start for now. Like I've been start to introduce the program inside this new 2023 Finance Act. 6 new key revenue enhancing measures them did. Just give you an highlights of how the 2023 Finance Act like for the listeners them we something not hear about them yet and the viewers them we not something not ever see them yet. Take me through the highlights of the 2023 Finance Act.
Yeah, thank you very much, Madam Presenter. I will tell now basically the highlights of the content of the 2023 Finance Act. The first one get for do with the minimum alternate tax, where they at the rate of 3%. Maybe later I'll give the details. I just want to highlight the key issues then. Then the second one gets for do with looking at the second schedule to the GST Act of 2009. We try for redo the exempt supply schedule. Exempt supply na goods them and services them we know for get GST at all. So meaning anything that second schedule not chargeable for GST, and anything on the day definitely will levy GST on them. So the longer that list of exempt supply, the tendency for the tax gap wider a day, meaning that if you get too many goods be exempt from GST, you end up for collect less revenue because everything will kind of give away. Then we also introduce the tourist levy for the one that way they eat at them hotels and restaurants. Not to cookie buffer or them basic side them people are really able to afford them for walking to some high class place and eat. So we introduce a tourist levy of 2%, where the main aim for support the tourism sector for grow. We think about revenue diversification, economic diversification. We don't see a lot of disadvantages from we core revenue handles as a country. Mining sector, not much coming from that. A lot of externality they affect them. So we say we will look at some other areas of revenue. So there's a 2% levy on the tourism sector for anybody who will buy or on a proper restaurant or hotel. Then we also reinstate GST on financial services. If you remember in 2021, government may exclude financial services from GST, meaning that where you do money, where they transfer money, you do any service with the bank, they offer you a fee-based service. They don't pull the GST come out now, don't reinstate them back because we think say Financial services, they have two aspects from the theory. That is, you get intermediation and non-intermediation services. That core activity of the banking sector not get GST. But any service where the bank they offer, you really pay for GST for be paid on that because now a value addition. So don't you still done. Then even in the aviation sector, that one they fly. They are playing whatever sector before now. We don't pull the GST commodity because we think it's one contributing factor to increase in ticket cost. But research and further study don't show say a lot more other issues and the result in that kind of aspect of increasing fares for aircraft and traveling. So don't stand back, forget about the revenue we don't lost it before now. Then the other aspects, the aspect of digital taxation, we look at them. Of course, it's not new because in 2022 Finance Act, we imposed a minimum tax of 1.5% on digital services. So we also don't try to look at that again and see for extend that to aspects of online gambling, betting, and all the rest of it. We all know say the older they go play gamble and betting, definitely able to afford them. So if we pay GST on all of that. Then another aspect, we get the 2% stamp levy, where if you go register, conveyance or document, we all know say where you buy property, you pay for them, of course, anything you buy. So there is a tax element in that, but the registration for authenticate and for legalize the transaction, it used to be 1% of the value of the transaction. Now they make it 2%, as opposed to 0.5%, to now be the original law. In 2019, we made that to 1%. Now we don't increase that to 2% stamp levy for registration of conveyances and legal documents. Then the last one we'll talk about now is the circulation charge. We're at 200 leon or 200,000 leons for each and every motor car or vehicle where somebody they register. So you pay 200,000 leons because having a property like vehicle definitely shows you don't get an asset way, probably meaning you can afford it and there should be some amount of tax you pay, just like we'll get stamp duty for register, any kind of whatever. But of course, we'll look at the details of that because there is a small typo error in including aspect of keke, we're not supposed to do it, just basically motorcar them, trucks, vans, and everything. We're at 200,000 when I just a flat fee annually we do register the motorcar. So these are the areas where this new Finance Act cover.
Plenty tax exemptions them waived for important issues them or things them where people are importing to the country where government's been the waive tax or give tax exemptions for. But inside this Finance Act, 6 key points then come. What did NRA look at before they propose this document and exempt and remove all the tax exemptions then from then goods and services then where they come within Salo?
Okay, maybe I'll turn out a little bit theory under the aspect of exemption in tax administration. When you provide too many exemptions in any tax law, you create unfair competition or unfair kind of practice amongst business community. You get certain people paying full taxes, some not paying full taxes. So the one that way they exempt go outsell the one that will not get exemption. So that to some extent will be very, very unfair. And also creating a lot of exemption, they widen the scope of tax evasion or avoidance, basically. Evading. You go look at USA exemption day, you try for reclassify your goods for see how much you will make use of them facility in the or even using some other sector, some other players within the economy will get exemption and use them as a conduit for bringing chargeable supplies in. And also using a lot of exemption, they reduce the tax base, meaning that the government will get less revenue. And in any economy for let go, the tax system will be fair and flat. So what normally best practice call for is that everybody pays taxes. And also you feel say somebody don't pay unduly or probably the commodities are so essential such that you want to incentivize them, you ask for a refund or rebate. That is why if we take this argument back to the issue of diplomatic and foreign missions, we're under the Geneva Convention, they're exempt from GST or VAT basically. What we do in the past Finance Act of 2020, we try for legalize say you go for pay your GST, come back and claim. Because if you know say you for pay GST, first thing you could do now for try for get documents for substantiate your claim and get back your money. The reason here now that the more revenue you can inside, the growth, you establish growth in tax GDP ratio, and the fund aspect will be as a kind of expenditure that is money going out. But all for pay as a fair practice for minimize evasion, gaps in the tax system, and also unfairness in dealing with other players in the economy.
You self make mention of essential commodities, and also where you talk just to make mention of some areas that we don't exempt tax. Exempting tax or removing tax exemption from commodity like rice, where everybody nearly in a saloon need, and compared to that of gambling, we know to everybody they in them. Whose consideration will not get in their essential commodities they may also before we exempt tax from them? And waiting at the provision for them in terms of refund, like you mentioned?
Well, you agree with me that if you look at the second schedule where we reproduce, mind you, the second schedule not a new law will bring come. It belonged from 2009, but it don't go through a lot of amendments over time. So the 2023 Finance Act just try for consolidate them and put on one page. So whenever I want to talk about exemption now, you go to the 2023 Finance Act, they see everything on one single document. So the aspect of exempting essentials will not rule out down there at all. Because if you look at rest we mentioned as your example, rest is still there as an exempt supply under the second schedule. And definitely meaning that you need to pay GST on rice, it is still the same. They're not only GST on rice, you need to pay even customs duty on rice. You know, and there's an aspect of port services where probably people in time for pickup say is not exempt. But this law also gives an implicit provision, because if you the bring can rest, for the rest reach the consumer, all services related to bringing the rice out of the port, out of the boat, for come to the consumer, obviously get for be exempt. And that make most of the times where the law that can come out. The general law give provision or right to the Commissioner General for make what to call practicing notes, for bring rulings, for bring explanatory notes to the users them or the business community as a whole. And we don't do that in the past. Some businesses can call for private rulings, would they explain the law what it means. Some, of course, public rulings make them available to everybody. And also get practicing notes we can put on our website for explain what are the details of how this law can be applicable. So rice being exempt supply, definitely, along the distribution channel, there is no activity along that line that can be GST chargeable, basically. So that is what I try to do.
All right, Ibrahim Sori Kamara, continue for the with me at the studio. We'll come back to now shortly. The program is still listening to and they watch live on Facebook. Now, Good Morning Salon, where they come to you from Radio Democracy 98.1 FM. Where they come to with other studio guests, we don't listen to Ibrahim Sori Kamara from NRA. It don't explain the major change within inside this 2023 Finance Act, the 6 new key revenue enhancing measures them where they don't introduce, and we don't begin to talk about some of the revenue enhancing measures here. So we're inside the 2023 Finance Act, because when Parliament give from this BNTM, a lot of noise be there around them, now the social media, especially for people where we don't see the documents as to the different tax them where they don't introduce now and how it will affect overall the living condition of people. You they come out from the Sierra Leone Importers Association, and most times now the business people can raise alarm as to where una go do business, una say una they meet up tax them, we can make the price them go up on different commodities in the markets. But just tell listeners and viewers and force, waiting on a thing about the 2023 Finance Act, taking into consideration the new measures them where the way government want for use for generate revenue for the national budget.
I would say we're disappointed, to be
Why?
honest. We're extremely disappointed for 2 reasons. I not blame the commission and also I not blame NRA. The blame they go directly to the Ministry of Finance. The Ministry of Finance not in charge with the responsibility for come up with the Finance Act every year. Now, it has always been a tradition when then they develop the Finance Act, forget what you call public-private dialogue, consultation with the private sector, because at the end of the day, now we get to pay the tax system. Now, when you consult with we, at least they get an input from the private sector, how we all go forward. We're not there against taxes. I repeat, we're not there against taxes. As a matter of fact, we want support government for let government achieve the flagship programs them. Let government able for the raise tax system for pay salaries for pay for essential commodities them. But if you dey raise tax for kill businesses, then where are you going to be getting the taxes tomorrow? And this is exactly what has happened. Now, Ministry of Finance don't consult with we at all. Usually then they consult with we. Because when you get input from we, then you will know exactly where it hurts. And it's hurting us. The economic situation is so difficult. And then, let me just finish with this. And then raise the Finance Act, take and go to Parliament, Mongbenly, go pass and day, we don't know. We only know about it when it is at the desk of the president for let the president sign them into law. That's the time we know about it. But we thank God again, we get a very vibrant Minister of Trade who gets an open door policy. Once we know about this one, we quickly call them over the weekend holiday and say, look, there is an issue about the Finance Act and don't pass them. President want to sign them. Can you meet with us? And then again, a call we on a Tuesday morning we go meet them and we go tell them most of the issues them. He also was a bit concerned because this act, if it go through, it will create hardship for the mass system. It will adversely affect we business system. It will adversely affect investments. We go lost jobs then at the country. We go lost quite a lot of things in the country. It go prevent investors, them potential investors, they wouldn't want for Canada this country also. Then go afraid for Canada the country. And this is exactly what this law want to do for we. But I'm happy that we don't put a position paper. I am sure it is on the desk of the president. The president will look them, and then he will send them back to a Ministry of Finance for let them go consult with we. Let them take we input. We're not here against paying taxes, but please, let we all do them together.
So for the benefits of people, we don't know what una put now on our position where you say una don't channel to the president because the Finance Act in desk now, whether or not you go get for sign, and that will be determined by the president himself. Waiting now on our position exactly.
Again, me not a tax expert, and I never claim for be one. I am a business person who just get me money, put them into business for help develop the country, create jobs, create wealth, create investment. Okay, when we look at the Finance Act itself, we get 9 new tax systems. I repeat, 9 new tax systems. You get one tax within call the minimum alternative tax. What then alternate them with the corporate tax? If me come to the country and come for can invest. Now, when I invest, every year I do my accounts. When I do my accounts, I do pull my investments, my expenditures, them, the charges, them, everything what they do, I pull them. Whatever are profits, government they come in and take 25% of them. Now, this new tax for them don't bring them, this minimum alternate tax means then they charge 3% on your turnover. Let me give you usai go get for affect a lot of we contemporaries them. Take for example, somebody who sell tickets. The ticket itself, the cost you not get plane. The cost of tickets, now the cost for the aircraft owners them, plus government charges them. So all what they make na commission on that, sometimes they go be $50, $60, $70. Now you get your own expenditure, you get for pay your salaries them and your overheads. If you go take tax on the you turn over, you they kill that particular business day. Look at the petroleum stations them. The petroleum stations them, that's when they bring come petrol. You get somebody to bring come petrol, then they buy petrol from somebody, then they put all them taxes them, go make petroleum go up, and then what's in then they put just a minimal margin, probably 2% margin. But if you can't take 3% margin from that particular company, you don't kill them. You see? And the other problem we get is if you go take 3%, if you go charge this company 3%, then what's going to happen? If in turnover is just 2%, you go take 3%, you are forcing this company for go back to the bank for go loan and can't pay you government.
You said they not consult una in putting these documents together. Una just know about them waiting at the president's desk for sign them. how it don't they be over the past year then in terms of developing the document between Una and the Minister of Finance?
It has always been a tradition for them consult with we. We get what they call PPD. Consultation can always happen. Then they can invite we in general as MBOs, that is members of business organizations or sectors. So like importers, they can invite we as importers and say, look, this is what we want to do, how we can go about it. Una come up with suggestions. Then go invite the banks them. Then go invite the manufacturers them. Then go invite the agricultural organizations them.
Whose role Una do they play in developing these documents in the past years? Them they can call Una.
Okay, we can always present position paper to them and make suggestions them. And then being always to come. It not necessarily say they can take 100%, but at least they can know where they come from.
In this document where they don't put together now, if they've been consulted now, what's in your input into them? Or what was change you think say needed for be made before it will go to president?
I will say you frankly, like the minimum alternative tax. If you don't keep on at the 25% corporate tax, why you want for kill business? Why you want for go charge tax to business? Would actually they make loss? Why do you want to do that? You kill them businesses there. So, okay, let me come back again to when the COVID hit 2 years ago. Who did them actually get devastated? Now, the tourist sector, the hospitality sector get devastated for 2 years. They know they run them businesses them. We're happy at the end. Let me finish. We're happy at the end. Government will bring in some measures that will help for cushion them. Now, the tourism sector, they try for recover. To me, government will just don't leverage on that recovery day. But why bring in new tax system? For can actually make them difficult for the tourism sector. Again, let me come back again to the charges them, the port charges them. For rice, for example. Because don't forget, say, we they import $250 million worth of rice every year. Would they bring in so much cement, essential commodities into the country? The port charges them. Now you don't can put GST on them. And GST now charge where they pass over. So who do you expect for pay that charge there? If the importer don't come, it don't pay in 15% charges. Of course, it pass over. So the effect itself is going to be on the mass system, and it will make a difficult situation.
Now that brings me to my next question.
Yes.
I remember where this news been just come out say Parliament passed this. Parliament agree for this particular act.
Yes.
The overall response will come from the public, especially when it goes to different medium them, been get for do with this, then just one can pack people in now because the current situation at the country and introduce them kind of tax on different businesses where una the importers them we can go buy cam, then the overall effect they come back to the masses.
They pass them over.
They say this go come pack them. So now you say the act before the president in table. If
yes.
you for talk to the president on behalf of the importers them, where the overall effects of this act therefore affects the masses, what can you go say to the president?
And please, I am the Secretary General for the importers, but here I talk for the private sector as a whole, because this is a the law itself, if you go through, it will affect 80% of the business system. 80%. In fact, it's a cost-cutting issue. The industry specific is about 10-15%. Again, let's come back again to something else here. Then don't come put tax GST on machinery, equipment them for mining and for agriculture. Listen to this. We spend $250 million for goodness sake for import rice into the country. We eat 3 containers imported chicken a day in this country. We eat 3 containers of imported eggs in this country. Now some of we don't begin to go into agriculture. They want them where we compete against Asia, then get subsidies. America then get subsidies, Europe then get subsidies. Here we don't get subsidies. Would they try for develop agriculture in the country, for make we able for feed we save, bring down the price of rice down, bring down the price of gari and other commodities then also, make we left for the importer, and in excess we go export. We go bring down foreign exchange. Now, duty free being there, pan the equipments them. Now, if you can't begin, they can't charge me GST on equipments them, on fertilizers and other inputs them. Tell me how you want to make a compete. And if for compete, then we go back to square one, concentrate on the importation. And what the importation they do for the country? One, foreign exchange. I make we get the foreign exchange not stable. And now if you want even foreign exchange, you go pass you go to black markets. If you go ask any bank for say transfer $1 million for it, they don't get them. Pass you get for the go to street go buy them. Again, labor. If we able to produce goods in this country also on agriculture, to be honest, Why we for transfer labor to Asian countries them when we for able for produce now so? But we're not for able because why we're not comparative, we not get comparative advantage, we not get competitive advantage. Then when they can make already a difficult situation more difficult.
So
and I will tell you, say rice prices them. You neither make when we produce food in the country. We're not able for compete against imported rice.
On our want dialogue will be missing from the start.
Absolutely. Please let me go back and dialogue. Let us go back and dialogue. Let us go back and dialogue. You know, that's what they ask for. Again, when we can put to position papers them, we don't need to take 100%, but at least then they you know, we input into the Finance Act. It's helpful as businesses. We they invest, we they pay taxes them, we they create labor, we they create wealth for people in the country. So let's all work together for developing this nation. Let's work together for transform this economy, not this country as well.
All right, continue for the between at the studio. Rashid A. Conte, Secretary General for the Sierra Leone Importers Association. The program Good Morning Salon, they continue.
The program is still listening to Good Morning Salon with the country from 98.1 FM. Features the genuine inserted edition of the program Good Morning Salon with a look inside the 2023 Finance Act where Parliament agreed for this BNTM. And for help we discuss this program, we get Ibrahim Suri Kamara, Senior Commissioner, Domestic Tax Department, NRA, and also we get Rashid A. Conte, the Secretary General, Saloon Importers Association. But quick one, we can to Ibrahim Suri, we now Senior Commissioner at Domestic Tax Department, NRA. You don't get the concern from the business people, and you talk about the cooperation we've been between in the last years, them compared to this one, we consultation much not been there for ensuring we put this document together. What in NRA we then concern from the business community go take home and do a consideration on this we now the Finance Act of 2023.
Yeah, thank you very much, Musa. Basically, the NRA, we as all know, are the administrative arm of the government areas of raising revenue, and probably the issue of writing the Finance Act. Most of the inputs now we can provide them because now we implement, now we that they feel they understand what's in the gun, and definitely the Minister of Finance get the responsibility for look at the bigger picture and see how much sense it make to them and develop the law we will now try for discuss now. You know, of course, the legislative process, I don't comment much on that because there are various approaches we can normally use for get the law done. You know, various approaches, but the process can differ based on the timing and a lot more other issues in consideration. But our Minister of Finance get that responsibility. But that notwithstanding, basically, this law, as we don't say earlier, it targets revenue generation and see how we'll try for create a fair playing ground and also minimize some bad practices of some businesses. Maybe if I can briefly comment on some of the issues that Mr. Rashidon raised and with now we own thinking around the law is the fact that firstly, if you look at the tourist levy we mentioned, they actually target lower level of people, not the high-end users. When they talk about people who get the ability for going to hotels, restaurants, like the Hub, like Lagundas, like the County Lodge and so on, people already get the ability for go to them places and buy food and drinks and inside the day. These are people where would they target in terms of tourism levy. So the majority of the masses there will account for 70 to 80% of the population not going to be affected by this. So the grassroots or the lower level people definitely not get affected. And besides, as I mentioned earlier, the tourism sector needs a lot of investment and a lot of expansion. We now have a new revenue area going forward. So this money will help governments for get funding for improvement better.
You said then issues are or then tax and they get impact on the ordinary Sierra Leoneans. But you remember people who left Freetown, for instance, go to any guest house or travel to the provincial areas for go work, then go tell you, say, because of ABCD, we don't add the price on them things there. So these are ordinary Sierra Leoneans, them way it impact on. And besides, the thing we will talk about, we now the rest, we government don't pull tax with APAM. Now, one way, every Sierra Leonean nearly they eat.
Yeah, definitely. As I said, you live in Freetown and traveling, staying in a hotel, wherever the hotel is, you get classes of hotels, classes of restaurants, classes of entertainment places. Where the fact that you make a choice of going to a place where you feel, say, depict your standard and your level of life where you live, definitely you can pay this kind of tax. You also get the option, if you go to poverty system, you can it's not like a guest house or a place where not even this tax no affect. Because I'm talking about GST registered business system. Under the levy across the board for everybody. Business away meet the thresholds for registration for GST now then get affected. And these are the high end people then. Maybe and then also with respect to the rest, this tax not affect the rest at all. As I mentioned earlier, the GST exemption still the rise, and port service by extension is part of the importation process and clearing process. So there's no way you can exempt rice bean in its raw state, and the service for make sure that the rice common at the port for come to the consumer go be taxable. So if even the business community needs a kind of a public ruling on that day, the NRA will provide that. If we need an explanatory note to the public for the business.
So you sure say GST not the GST not the because the reason why they ask.
Yes.
I they see the major GST exemption charges, removal of exemption for port services for the import of rice, plants and machinery for agriculture, manufacturing and mining, solar energy products, and free and promotional calls data. How you going to explain that one day?
Say we get various version within the social media. People don't summarize the content of the law, and in versions that we probably easily understandable by them, or probably the people already listen to them basically. But waiting as I was saying now that the intention of the drafters. The intention of the drafters is not to include port services in the exemption, and definitely that will make clear in the CG's explanatory notes.
I see the imports are replenishing.
They come to we the administer the taxes, and we get a rule for playing in this respect. So that's what I will tell you about. Then let's go back to the area of the minimum chargeable income tax, the MAT, where Mr. Rashid also mentioned. Obviously, Mr. Rashid also will agree with me that we get a lot of multinational companies who they operate in Sierra Leone and elsewhere in the world. And these are taxpayers and most of them objective now for see how they can plan their tax obligation around the existing law. And to some extent, then the target for shift profit from Sierra Leone to elsewhere, and also they get lots of excessive tax planning schemes where they can back on, where continuously or constantly they can show losses. You get business that don't exist for over 10 years or more. You show loss constantly. So why in business? That's a simple question somebody will ask. Why are you in business when 10 years or more you don't ever declare profit? So there's something hidden somewhere where probably we also as a revenue authority will not complacently list them. We do a lot of capacity building and updating of we software systems and for capture something in a day. So this law they target the high-end users. The use of MAT or minimum tax basically would say their cost. Even look at the SMEs, we get 3% on overtax on SMEs. You don't need a law all this while. We go up for 5% tax on digital services. You don't need a law all this while. On turnover basically. And what is law itself on top of is that you they pay you MAT obviously, but you get your actual profit we make for the year. Okay, maybe that could be as a provisional assessment basically. Then when the year done, you do your actual computation. Where you think say the actual tax where you for pay is lower than the MAT, there comes the tax credit. You utilize over a period of time. So basically, now a roll out basis, but for minimize double non-taxation, and for also prevent this high-end taxpayers and way then get sophistication or the capacity for bringing in experts for see how they can pay zero tax in a jurisdiction like this, where the revenue is much needed, where most of these players occupy the larger economic space. They are going free of charge without paying a dime. So we get a situation where you did put something on the table. When we go out there with audits and other work we do, we give back your money.
So what about
in
the
different
tax
form.
increments we go there on agriculture, plants and machinery for agriculture? Because with the season and the diversification of the economy, they focus on agriculture.
Fine. Let me also clarify that area there. There is still exemption for agricultural produce. Of course, you talk about the equipment and plants and machinery. There is now GST on that one day. What we try to achieve in this case is that we target also high-end agricultural producers, people that have a sophistication to embark on commercialized agriculture. just like somebody having a factory producing any kind of commodity. They pay the related taxes on those activities. So if you know an agricultural person, basically, you don't import goods, the GST charge on that machine day, of course, are part of the cost of your assets. Okay? Then what did the law do? The law know they only charge you a cost and left and day, or you just lose sight of farm or be extra burden. The law also get provision of what we call capital allowances. So even when you don't pay your GST on that one day, it don't form part of the cost of the assets. So over time, you recover that cost through capital allowances, would reduce your profit tax over time. So it's not saying that you are not going to get that money. You claim them back in the form of capital allowances, in the form of first-year investment allowances. Then even if you decide to sell the asset self, you recover again where the sell out to the consumer. So this is not a cost that government will just... The only thing is it comes upfront. Then over time, it is spread over a period of time where they recover within the same year where the assets be very useful or in the process of generating economic activities. And this law no intent for target any of those people that are embarked in agriculture on that rudimentary level, that subsistency. Like that person use cutlass pickaxe for basically try to get and to mod from agricultural activity. It's not targeting those kind of people. Okay. That's why the Commissioner General's practice in notes for bringing all the issues that are clearly explained and give comfort to taxpayers where they will know at the end of the day nobody's going to be exploited. At the end of the day, whatever money you don't pay, where you feel you don't pay now, before the year done or during the course of your business, definitely recover them. Because the assumption here is that business continues for forever. That is why even when you're making loss, you still feel say you go with the business because you feel say the future will be brighter. So all those losses, all those monies you have to recover them. And IDMA could do auditing and will do a lot of data matching for see who side the gaps and who side like the overall education or they'll give back over a scheme. And we've done that over time.
Continue for stay with me inside the program. Ibrahim Surikama, Senior Commissioner, Domestic Tax Department, National Revenue Authority, NRA. The program Good Morning Salon, where they can to from 98.1 FM.
Right, the program Good Morning Salon, they continue. We come over to Rashid Ekonte. We don't listen to Ibrahim Surikama, where they respond to some of the issues them way you don't raise in the program this morning regarding the 2023 Finance Act. And for us, for example, where plenty people been thinking say the tax exemption don't come up and it say no, there is no GST on rice. And as see where they make in statements, you be the shake your head say not to waiting then at the act they talk.
Absolutely. I mean, you read them clearly to the country, and you actually see, look, it's not just the cost of buying the rice. You get the cost of shipments. Then you got the additional charges them of transportation. I bring machinery them come just 2 months ago. For take those machines then from Freetown to Bow, the transport charges alone cost me 17 million for 120-foot container. Imagine if I sell, I of course go transfer the charge there to the final consumer. So then port charges there, so all then GST there. So it's going to be transferred. It go affect the price of rice and essential commodity in the country. I totally agree. They don't add direct GST, but the charges them. These are all costs. What the importer get for pool, and understand this one again. The importers then they work on volume rather than value. Most importers then they work on 3%. I know a friend who, when you bring tile, for example, now 3%. If you buy tile for 150, they sell it for 160. 10,000. That 10,000 then they pull in transportation. And you get for pay the one day within the total. So something at 3,000. You see, so of course you will get for increase in price. Now let we come back again to the tourism Ibrahim said we talk about. Time magazine recently ranked Sierra Leone among the 50 top countries in the world for destination, for camp. Why should we not leverage this one? This just also say the government they do well for promote Sierra Leone as a tourist destination. This just also say the Ministry of Tourism they do well. Let's leverage it. When they compete against other countries in the region. I go now Senegal just about 3 weeks ago. I met Sierra Leone and Sunday. I asked them, what you can do now? So you come out America, come do tourism now Senegal and Sierra Leone is just 1 hour away. What did he tell me? He said the cost of coming to Sierra Leone is almost 2 times the cost of coming to Senegal. I will tell you exactly the cost. You get increased cost of $240 just for coming to Sierra Leone. This is the for pay you charges them, one na the boats for going to airport, then at the end you go for pay $25 security charge. This not include the 20% increase charge or associated with new airport itself. You tell me how you going for attract a tourist then for Canada country. When I was in England, if I come to Gambia, I pay £600. The £600 cost involve the return tickets and a week na hotel with breakfast. Try in Sierra Leone. You can't. The cost of tickets is high. People then now, people are just holding for me. People then they go now, na Guinea for go buy tickets and go out. Mrs. I don't do them 3 times for going to Dubai. When I came to Sierra Leone, I asked, it cost me $1,600. I went to Conakry, it cost me $900. Who said you expect me for go? Okay, now I come back again now to the GST on agricultural equipment. And I'm happy that Abraham said we talk about big components. Now, MENA 1, for try for address the food insecurity, the malnutrition of the country, I decided for commot from importation for go into agriculture and agro-processing. I get one of the largest Gary factory in the Mano River Union, the largest cassava farm, I would say, remain to be corrected, that the Mano River Union. I go into industrialization for address the food insecurity in the country, wealth and job creation for people then. Well, if I'm sorry, they come the targets, people then, would they come for industrialize? What not the only way for we able for move this country from importation? Then you tell me, how we not go continue for the import?
Now, the NRA man we been the talk, the justification
yes.
of then charges and then steps them we government
that
take or we NRA take.
Yes.
And they give otherwise. One reason we give for avoid tax bypass and tax avoidance. You think so with then charges there also or with the new Finance Act for 2023 go make NRA achieve that the aim of tax bypass and tax avoidance?
Musa, in every tax administration, to be honest, you will get people, you will get tax dodgers. But 1 or 2 tax dodgers are not going to make you go penalize the majority. Now, they tell you about industrialization. If somebody can industrialize agriculture in the country, what thing they want for do? They want for help for we address food insecurity. They want for we stop this whole idea of them small families, subsistence farming. We get for go beyond that. We get for, and the Minister of Land don't do invest. Government don't do. They don't enact new bill. Would they encourage big farmers for Canada country. Now, if you want for take land, you can go up to 50,000 acres, and I think where we want for encourage. But how you go encourage them? Now you don't begin the bang. You don't begin the can go put GST on tax on the equipment them. Me bring them, as I tell you, I bring them equipment them just about 2 months ago, and I pay 1 cent. Bravo! I tell government thank you. Because the money we have been for don't use for pay that tax, now I use them for increase the size of my farm. You see? So, and there are other countries the way they compete against, to be honest, and get subsidies, huge subsidies. We don't get them.
So as to the wrap up the program, waiting will be your message, especially to the president, when I finally go for decide whether or not this particular 2023 Finance Act will come into effect. That's if he sign it or not. Waiting will be your message from your own perspective, but the dangers of this act if president agree for him. Waiting will be your message.
I will talk to the president directly. Please, this particular bill, no sign them, send them back to the Ministry of Finance, let them go consult. The president don't try. When the COVID hits, then Bank of Sierra Leone puts $100 million revolving fund for the importation of essential commodities. You see prices then go up, but we continue to get food in the country. Bravo to government. Bravo to government for the Munafa fund. Wouldn't bring come for target then small SMEs there. But then taxes there wouldn't come. It go kill them back again. So government gain at one hand, then you take at the other hand. You go kill them. Then people are in they already they struggle. And governments don't try for sign up to the AFCFTA. Bravo to government for that. Now we get access to 1.3 billion people them what we create for selling Africa. But again, with then taxes there. So how we go for compete against them people there? So of course, again, the hospitality industry, it's seriously affected. And let her finish there on one. Again, this duty on renewable energy. The renewable energy, they affect the ordinary man like Kailaun and Kenema. Because there are people that they need solar lights, they need lights, not so a privilege. It's not a privilege. They're not able to get from the national grid. But when they can go buy any small lights they put them, in order only to improve their livelihood, but the picking and self then let's say they need for study. So do you make them pull their taxes there, so make the ordinary man able to live.
All right. Many thanks to you, Rashid A. Conte, Secretary General, Sierra Leone Importers Association. Wrap up the program to you, Ibrahim Kamara from National Revenue Authority. As we wrap up the program, you think say then taxes are so timely, taking into consideration the current situation of people and condition of living?
Well, definitely the functions of government therefore be ongoing, and governments depend on financing for carrying out activities. So taxation will not go ever rule out in any proper governance system, because then they bring peace, stability, even for do business itself. If there is no peace and stability, we will not talk about them doing business. So I feel say taxation generally be a very good tool for support government activity. And definitely, as Mr. Rashid say, the dialogue continues. But one thing I also assure is the fact that there are always ways how the business can be supported in understanding and implementing these laws. There are a lot of guidance when I can give. There are a lot of seeing beyond the text, where probably the normal man will see. When I done the video for ensure say the general public and the masses not get adversely affected. So we get that kind of human face, and consistent with the law, we provide further guidance. And mind you, this law not they be interpreted in isolation. We get related tax laws the way would they complement the law there. For instance, if you talk about not paying certain taxes, basically there are tax planning schemes where government can approve to NRA. So that law continues. Definitely, we provide interpretation notes, and we go make sure say everybody comfortable, but at the same time giving government the resources for people all peaceful and happy and progress as a state.
Many thanks for the program this morning. We will get Ibrahim Kamara from NRA and also Rashid A. Conte from the Importers Association. Now, this edition of the program, Good Morning